Well, this week, I guess the obvious topic would be the Democratic debates. They have been on the disappointing side. I think most people would agree. The one kind of clear trend is that Elizabeth Warren seems to be steadily rising. She did well in the first debate. I think she kind of clearly got most of the stage and did the best in the second debate here this week. Bernie Sanders, there was all these arguments in the past, people saying Sanders was the one guy that could have beat Trump, back in 2016. Well, that is not what these debates are showing. He was weak, I thought, in the first debate. He was stronger in the second debate. But when you looked at the needles of measuring how the Democrats and independents and Republicans are responding, and of course, who's important here? The independents, as I've been saying. This is a thing where Trump has already taken the far right. That is his. There's no contest there with anybody. The Democrats have to win over some of the independents that voted for Trump, or they are not going to win this 2020 election or even have a chance. Bernie Sanders, especially on his comments on immigration, was basically going against the independents. The independents were going down. So I think overall, even though he did better in this debate, the first debate, which was stronger than the second debate, Elizabeth Warren still really came out there. And Pete Buttigieg just looks like a nice guy that everybody likes, and he's very competent and coherent. Problem is he's 38 years old and looks 26. Looks like a Boy Scout or something. So, he could just be a vice presidential candidate. I don't see any way he becomes the number one. So it really is between Warren, Sanders, Biden, and Kamala Harris. Now, the second debate, Kamala Harris did very well in the first one, going after Biden very strongly on the kind of the racist issue and segregation and stuff. But this time she stumbled more. She got hit pretty hard by one of the smaller Democratic colleagues, a female, on her record of prosecutions in California. So she did not do as well this time. And Biden still is the number one in the polls by far, but he always comes off stumbling a little bit, not totally coherent, a little bit senile. And hey, he's old enough. He's not bad for his age or something. But, I did see a poll early on that said, some of the biggest turnoffs were over 70, and Elizabeth Warren even just turned 70, but, he's 77. Biden's up there, I think 76 or something. And also socialist was a turnoff, and Bernie comes off as the most socialist, I'd say, at least of the front runners. And surprisingly, evangelical Christian came. It is not a good sign. I think just because a lot of people feel they're a little extreme one way or the other. But in the second debates, Biden didn't come across that. Nobody really came across that well in the second round of debates. So, Elizabeth Warren seems to be the rising tide here. And we'll see what happens. But it is important to keep looking at who is affecting the independents. There's a guy in there, Ryan. He was doing the best, especially in immigration. The independents were favoring him more than Republicans and Democrats. He was getting the strongest response there. So the Democrats need to get hip. They can't go extremely far on Medicare, and Elizabeth Warren scored some points saying, we're not going to be taking away private insurance. We're going to offer a public option. We're not taking away. And they can't go too extreme, like, we're just going to have open borders and give welfare and Medicare to all illegal immigrants. So they got to get hip on that. Now, my view, though, of course, is always different because we have the economic view and the cycles and that sort of stuff. I think the economy and the stock market could be the biggest issue in 2020 because we are in the late stages of this bubble. We've said since Trump got elected, we're kind of entering that final blow-off phase, the dark window. We've been increasingly calling that. And so far, the Fed did disappoint. On Wednesday, even more than I thought. They said 25 basis point, yes, but this is not the signal that we're just marching to cutting rates to prevent a downturn at all expenses. We're going to need to see the data. Not what Trump wanted. And Trump actually made I thought it was a clever claim in the end game. They're saying to Powell, hey, this is not just about you doing 50 basis points because we're worried about the economy getting weak too quick as insurance. It's about you guys compensating for being wrong about tightening in the first place, starting to sell bonds and raising rates. So actually that was a clever thing, but Powell didn't go for it. So I think the thing stands out. I mean, the market reacted to that. We're right at this turning point, I've been saying, right around 27,300 to 400 on the Dow, where we've got resistance from tops, trend line through the tops in the last 2 years. Very clear resistance. We've been saying that, and the markets have stayed right there. It's broken back below that, clearly, but it's coming back on Thursday. So we've yet to see if the markets turn down before they turn back up again. It still looks like the markets are going higher. And the problem with that for Trump, he's rooting for this, but the problem from my view, if this bubble really plays out the way we're seeing, NASDAQ 10,000 by early next year, January, February, March, and even if we get a bigger correction here, then it could be a little later next year. If that first crash is usually 40%, 30 to 50%, and who knows how the Fed's going to react this time, but I know they don't react that fast, and they're already saying in this case, they're not going to do that sort of thing. So I don't think they'll catch that in time, and that coming in early next year or mid next year, a 40%, maybe 50% correction in the NASDAQ and similar in the Dow and S&P. And in that case, you'd probably see some signs that we're entering a recession. I tell you, it's very hard for any president, popular or not, to get reelected. And Donald's very popular with his constituents. They see 30 to 40%, but there's still a majority that do not like him. So again, he's got to win the right states, and he's got to win the same independents he did last time. And the Democrats so far don't seem to be as cognizant of that as they should be. So I think the economy and the stock market could be the deciding factor depending on when this bubble finally blows. If I were Trump, I'd be rooting for the bubble to proceed a little slower and peak late next year. And the wild card for me as a forecaster, obviously, is that as much as this bubble looks like it is in its late stages, by every measure at this point, you do know that any sign of weakness, and Donald is going, if he has to send people money in the mail, if he has to come up and try to convince the Fed or somebody to do that, he will do it. So that's the biggest wild card. If things start to weaken, as I expect, I still see early next year, not yet. Markets still look more up for months to come. And again, we could see the best of this rally yet. But the more it goes up, the more likely the bubble fizzles out and comes down of its own extremes. And then, of course, there's all the things that could go wrong with China that keep going wrong and many other things, and housing weakening and things like that. So plenty of triggers. And again, I'll be talking more in future months in our newsletters about the emerging market debt trigger. That is the biggest thing. The smartest economists, Nouriel Roubini, are starting to focus on that. And a lot of people are saying early 2020 looks dicey. Some countries and debt, emerging world, and high yield debt in countries like the United States is the biggest danger to this economy and rally at this point, especially emerging market debt, because our central bank policies in developed countries cannot offset their downturns and their crises as much, especially China. If real estate ever starts panic crashing in China and wealth starts dissipating there's not much we can do about that. So again, I think watch the stock market, watch the economy. The more it goes up, the higher chances of a big crash next year. That will not bode well for the sitting president, Donald Trump. So we'll keep looking.